Well, the Nifty is actually done quite well for this week, right? You've seen the benchmark index gain 2%. You saw, even for the day gone by, we were up around 0.25% thereabouts on your screen. And in terms of the big movers, I want to quickly highlight there's Bajaj Finance, which was the big mover in trade today. And we also saw the move being sharp for the week gone by. Therefore, you've got 12.5% in terms of the gains that Bajaj Finance clocked. You also had Jio Finance up 9% for the week gone by. And then there was the IT pack. That's been relentless. You've seen a 9% gain on Infosys alone this week, near 9%. Of course, today was a bit soft where Infi is concerned. But you can see the kind of jumps on your screen with regard to the way the stocks as well as the sector as a whole has behaved. Bajaj Finserv was the other big gainer for the week, 8% higher. Eternal, 8% higher. M&M, 7.5% on the back of numbers plus positive commentary. We had management as well come in and speak to us. There was Tech Mahindra as well, which made gains of around 6% 4% lower though for Adani Ports. BEL's numbers also failed to enthuse the street, 4% lower. Coal India, ONGC, HUL were just among maybe 10 to 12 stocks which have closed in the red for the week gone by from within the Nifty. So it's been a very, very decent week, even though today the breadth was even Steven, 1:1 on the market breadth. In terms of index movers today, 1.5% lower on the Nifty IT. That is the one that really stood out for the day. But outside of that, you also had FMCG, which came under a period of pressure for today. That was down around 1.1%. For the week gone by, though, you had auto as the other big winner, nearly 6% higher on auto. Pharma was up nearly 4%. You had gains coming in from the Fin Nifty. The Nifty Metal was also up 2.5%. The Nifty Realty, slight underperformance versus the Nifty, but up 2% nonetheless. And the Nifty Bank, well, that one was up 1% thereabouts for the week gone by. Energy and defense were the top laggards for the week gone by. That's how we kind of shaped up. Going across to Meryl now. She's here with some of the cues you want to keep on your radar for the coming week's trade.
Right, it's a packed week that we're heading into. Let's take a look at some of the major events for investors to track in the upcoming week. Back home, all eyes will be on RBI's rate decision along with HSBC manufacturing and services PMI coming out. Globally, the spotlight will be on US jobs data, including non-farm payrolls, unemployment and JOLTS openings data. On the earnings front, do watch out for Novo Nordisk, Nintendo, HSBC and Warner Bros. From the global heavyweights listing, which are going to be reporting their results. And it's another blockbuster week for India. Among the Nifty names reporting results, we've got Bharti Airtel, Trent, Titan, Hindalco and SBI. On the corporate action front, Premier Energies, Hubtown and Samhi will be in focus on potential fundraisers, while MV Electro Systems and RD Industries will be in focus on back of their IPOs listing as well as closing and opening in the coming week. Globally, investors will also be tracking the OPEC Plus meeting over the weekend and developments around Trump's media's Truth API launch. So do watch out for all of these counters in focus in the upcoming week.
All right. Thank you so much, Meryl, for giving us that take. Now, I want to bring on board Rajesh Kothari. He's CIO at AlfAccurate Advisors. Rajesh, it's been a while, and it's good that I'm chatting with you end of the week, and also at a time when, earnings have started to kick through, right? Because you understand capital allocation, earnings quality, as well as you're a bottom-up investor. So this kind of gives a good confluence to getting your views on how the markets are doing. Let me start off with earnings quality, Rajesh. How is it looking this time around? We've seen earnings disappoint for the last couple of financial years. Do you think that speed bump now, we're nearly over that, does it give you more confidence?
Well, hi, good afternoon. I think the most important thing, when you look at economy, it gets divided into three buckets. First is the credit, second is the consumption, and third is the capex. So let's do it one by one. When you look at credit, the credit growth of the country became low single digit, about 8-9% during last year. Now this year, as I speak with you, as per recent RBI data, it is almost close to 17 to 18%. This is a very healthy indicator. It means country in general overall is doing well despite the 1Q related challenges, particularly on geopolitical front. This same number is also getting reflected in the most banking and finance companies numbers, be it a large NBFC companies which are facing consumer, or be it large corporate banks, primarily on private sectors. Across the board, we have seen good amount of disbursement growth and good amount of overall AUM growth. Equally important is the asset quality, and most of the banks as well as NBFCs have reported improvement in credit cost. This is very, very important because there was a fear that rising loan growth may lead to substandard asset quality, but the most indicators reported by the banks suggest that the credit cost is also showing very healthy trend. Third important, of course, is the net interest margins. And here also, by and large, the banking and financial sector has done reasonably well. This is a very important sector, almost 30-35% of Nifty. And overall, of course, for economy also, it gives you one clear indicator that credit growth is improving with a healthy asset quality trend. Second bucket is consumption. This was the most, I would say, sector under pressure since COVID times. But the good news here is, in this quarter, unlike most street estimates, even the FMCG companies reported improvement in growth, as well as the discretionary side of the business have also reported improvement in growth. So it means consumer is no more under pressure. There is an improvement in growth, be it rural or be it urban. There might be company-specific issues, but in general, for the broader economy, situation is quite good. If you also look at the automobile volume growth, which gets reported every month, April, May, and June numbers are already announced, most of the two-wheeler companies have reported good growth. Most of the passenger vehicle companies have also reported high single-digit growth. So it means discretionary spend and overall consumer health is also improving. Third important is capex. Now, when your bucket 1 and bucket 2 does well, normally third indicator also with a leg does well. And whenever there is a trinity of capex, consumption, and credit, corporate earnings growth improves. And when the corporate earnings growth improves, market rewards the growth.
Excellent. Really well put together. What do you play? Because, you make a very important point that if you get this trinity, then it'll be slightly more sustained in terms of the earnings momentum and the growth that we're currently seeing. And capex seems to be picking up, right, Rajesh? There is wholesale lending, which has happened in a larger fashion. You had one of the largest private sector banks come in and say that their margins fell because of wholesale lending that they did. And then you had the largest capital goods company, L&T, come out this week and say that private sector capex seems to be picking up. Ordering has picked up. I mean, it's evident from the kind of order book that they have. How do you play this theme, if you can give us a sense?
So I think, see, we are sector agnostic and we play across, sectors. Of course, each of this bucket is a number of sectors. So consumption, you can play through, we are more bullish on auto ancillaries as a companies because there is a premiumization is the trend. When you can look at the consumption, discretionary is, of course, doing much better than FMCG. So we are rightly positioned toward the discretionary spend. If you look at the capex, I think there are enough opportunities. One very big opportunity has been the EMS. EMS is a theme which we discussed, I think, few quarters back, on your studio, and most of these companies have delivered fantastic numbers. Government PLI schemes are very, very important, and therefore the semicon is a new segment, electronics is a new segment, defense is a new segment. So many new sectors are emerging within capex. Nuclear power is a fourth segment. Data center related themes, be it some chemical company supplying to the data center, or be it somebody manufacturing the energy box for the global companies. All these are very big emerging themes, and the size of opportunity is much larger. Think of the companies. There are some companies which are talking about a 5 times revenue compared to what they used to do in FY24. Compared to 2 years back, they are talking about 5 times revenue over the next 3 years. So the size of opportunity is really big. Margins are also healthy. Return on capital employed is also quite satisfactory. So I think capex is, of course, a third large, very important thing. Apart from these three, of course, there are various other themes. For example, healthcare is also doing reasonably well. Hospital sector is doing reasonably well. CDMO, there are a number of opportunities in CDMO. So depending upon each sector, what we do is that from portfolio construction perspective, we divide each sector into various micro and mini segments. And then depending upon the business cycle of each of that segment, we take the right positioning, of course, with the right company.
That's important as well, and what you pay for it is crucial, right? I mean, you could well be 5x in terms of revenue versus FY24, but how much of that is built into the price is really the question. What we'll come back and ask Rajesh is, of course, one of the key themes. Very difficult to not talk about IT. We're going to slip into a very short break. We'll come back and ask him about IT. He's spoken about auto, of course. That was the other big gainer for the week. And what we'll ask him is any themes where valuations haven't fully captured the upside. We'll try and talk about a couple of those factors on the other side. Stay with us. All right, welcome back. We were in conversation with Rajesh Kothari. Very interesting conversation. He's saying earnings are at an inflection point, various levers available to ensure that this could be a slightly longer and more structural kind of earnings growth story. Rajesh, coming to the biggest topic in the room, right? IT. How should one position oneself? I'm just looking at the Nifty IT returns for the month, 17%. Despite a bit of a fall today, we're still 17% higher for the month gone by on IT. One, give us your thesis with regard to IT. And two, how should one position oneself?
I think on a sector, if you ask me, my personal view is cautious on IT. And that view is there from last almost 9-12 months. Of course, companies are, or many of these companies, they are cash-rich companies. They have the best of the management. They have the best of the governance. And it's not that they are going to close down tomorrow. So, moment the FCF yield comes to your favor, that's the price point where your downside will become lesser. But that also means upside is lesser. All of a sudden it became more like a value stocks instead of growth stocks. And please remember one thing, that for value stocks, you need to buy at a certain valuation and you need to exit at a certain valuation. And that gap will be only 20-30%. It is not that it is a 20% compounder or structural growth, or there is a huge tailwinds are in your favor. In fact, it is a reverse of it. But yes, in the short term, these things can work because the cost of tokenization has gone up. And therefore, there is a kind of a, what I would say, just like how there was a narrative that IT companies are going to close down. And that was, of course, wrong. Similarly, now there is narrative that, the cost of token is going to be much higher compared to your actual manpower. And therefore, IT services will do well. But there is also important thing that innovation brings the cost down significantly. And there is going to be huge innovation when it comes to cost of tokenization. So some big innovation will come at some point of time. Who knows when? It can be tomorrow. It can be after 2 years. And then again, we are back to square. So I think we need to be very, very stock specific rather than taking the macro sector view. On sector, we are not so positive. The valuations, the margin of safety at the right point, probably, I think that point is probably now gone. It is very, very, very favorable. But from there, anyway, the good rally has happened. But if you want to take 3 years view, it becomes very difficult to, make it overweight. So, we remain, what I would say, cautious on the sector. But within sector, you need to pick and choose the right companies which are probably not only pure IT services, but more into the product-facing business of it. Probably they will do a little bit better.
Okay, more product-facing. All right, so that's the way probably you play IT. Give us a sense on consumption, Rajesh. You touched upon it, right? You said consumption has picked up, but just so many ways in which you can play consumption, including auto. So auto is clearly something you seem to be bullish about. But again, in auto, would you play auto OEM, auto Ank? And even within consumption, is there a specific pocket you would play? Would you play retail, value retail, or would you play core FMCG? How should one play it?
So as I speak with you, we have I would say almost zero FMCG. We do not have much exposure to FMCG. I think it is not that FMCG segment is a problem, but I think there are most companies within the FMCG, they are not probably doing the sufficient innovation. Probably they are in the protection of the margins mood, and therefore the revenue growth is very, very sluggish. And there is a fierce competition from e-commerce players, the D2C brands, and that is taking away the market share. But of course, the huge potential is into the discretionary side of the business. And when you look at discretionary, the value retail is one important bucket on which we are very positive. There are various other categories in the discretionary side, be it, for example, the building material is one segment which will do better, because the real estate, which has done well in last 5 years, now the actual delivery time starts now. And when the delivery time starts now, at the time of delivery, you need more of the building material, be it tiles or be it plywood or wires and cables and so on and so forth. So I think the building material will do well. And likewise, there are segments within discretionary. I think that will do better compared to the overall general consumer market. So we are positioned more towards that.
That makes sense. Rajesh, between auto and auto EM, auto Ank, is there a view there?
Yeah, we are very bullish more on auto ancillaries rather than auto OE. Auto OE, again, we need to be very, very selective. We need to keep in mind that the car industry growth as well as two-wheeler industry growth is going to be single digit, maybe 7, 8, 9% kind of thing. But so we need to buy companies where we believe growth can be at least 18, 20% if we are selecting any OE. And hence we are more bullish on the auto ancillaries. Here there are a number of triggers which are happening on this side. One is the premiumization of the vehicle, and that means higher content per vehicle opportunity. Second is many European companies, they are doing more outsourcing from companies like India, particularly on the casting side of it, sheet metal side of it, and multiple segments within that. Third, very important is, auto ancillary companies, they are very good and efficient in the precision engineering. And few of such companies, they are now diversifying from auto to aerospace. Few companies are also moving to defense. So they are adding the more streams to their businesses. And that is, of course, a huge growth driver. And last but not least, there is also good export opportunities, be it a direct export to Europe or their subsidiaries which are set up in India. So I think auto ancillaries is a very bright future. And many of these companies, they are very niche companies. They have a very strong balance sheet, very strong, return ratios. And I think the growth opportunity is also, very strong. It is a very big manufacturing theme to play. Auto ancillary is a best option to play the manufacturing theme.
Okay, so that's one way to play it. Rajesh, I wonder how you're looking at the export opportunity that India is starting to see, right? Manufacturing, domestic is one piece. The export is the other piece. EMS, textiles, chemicals, auto Ank again, comes to the fore. Any of those themes or sectors that you're playing, and what would be top of preference and what would be good risk reward at this point of time?
So I think, what we prefer when it comes to the manufacturing export side of it, most of the companies are generally globally competitive. We prefer to buy businesses which are globally competitive, and exports will be one leg of growth. It will not be the only leg of growth. So in a way, it is good because on one hand, you have a strong domestic market. Second side, you might have good replacement market. And third, export becomes a third leg of growth. And when they do well across three is great. But in case one leg is not doing so well, then at least you have other two legs which are doing well. So I think the most manufacturing themes, be it a chemical, more of specialty chemical, or be it a, what I would say, capital goods engineering businesses, or be it a auto ancillary, it is a mix of domestic markets and export rather than playing, pure exports. When it comes to pure exports, that's basically a little bit again, we are not too sure about it. Like, for example, textile, still coming out of the tariff related issues. Of course, now we have FTA signed. So hopefully when the EU FTA will come into place, I think textile will have a much bigger opportunity. Till the time, it will be more like a neutral or more like they're still coming out from the negative side of the tariff. So then you need to be a little bit cautious. I think we are more bullish on the themes which are doing both domestic as well as export. You don't need to have only exports.
Right. Rajesh, wonderful speaking to you. Thank you so much for coming in, giving us that perspective. Always good to look back at the larger picture and not at the individual news stories. So you gave us that. Thank you so much for that.
Thank you. Thank you so much.
Thank you. All right. Timed out, in fact, on this edition. But up next, an exclusive roundup of the week's key developments from Maharashtra in our Maharashtra 360.